Hello, this is IndoShares Create.
Mr. Create,
Mr.
Mr.
Create.
N.
Mr. Connect.
Always confused with the name.
Yes.
It doesn't matter, we're just masked man, you know. So just you probably don't even know who's speaking right
Yes.
now.
What matters is stock and
Uh-huh.
information. So
Yeah. What did we bring this week? So
well, this week,
one of the hottest stock
hottest
in the market,
in the current market.
double its price. Crazy.
sounds like bubble.
Yes. So we all know.
Yeah, we all know. If you think about accommodation reservation,
What do you think?
what do you think?
Like we say, let's Google it. If we get a room, let's get an Airbnb.
Yeah.
Yeah.
So
So
today's
this is
market.
it. Today we're gonna introduce the Airbnb.
Mhm.
And well, as you maybe all know, it's an accommodation reservation platform, online platform, and it was founded by those Brian, Joe, and Nate.
Looking rich, looking rich.
Yes.
And it was incorporated in 2008 as Airbed and Breakfast Inc. But it was renamed in 2010 as Airbnb. And it's been listed to Nasdaq just like 10 days ago.
Yeah.
Yeah, 10 days ago at the price of 68. The IPO price was 68, but then it jumped up to 146 on the next day, right? And business model, it's pretty much simple. It operates a global marketplace, linking both hosts and the guests who wants to experience and stay at a home. Yeah. So the revenue for this company is generated from the nights that the guests are staying and the experiences. And the Airbnb customers are hosts and the guests. And they collect services from these hosts and guests. And they use the services for the platform operation and customer support and payment processing activities. And Airbnb, recognizes the revenue upon the completion of a check-in by the guest. And as you can see in the right-hand side, service fee will be charged to customers as a percentage of the value of a booking, and the booking value will be collected from the guest and also the guest fees by the Airbnb. And after check-in by the guest, Airbnb will disperse the booking value to the host, and after they deduct the fees from the host. And Airbnb will only charge host fees to the host for experiences. What do we mean by the experiences is like those outdoor activities like what
One-day classes.
one-day classes or paragliding, whatever, that can be provided nearby the host's accommodation. So when you think about the competitors are include online travel agencies just like Booking.com or Agoda, and and also those small accommodations can be found via internet search engines just like Google and Baidu, and like TripAdvisor and Trivago collects information from online travel agencies like Booking.com, Agoda.com, and Expedia, and so on. So they can also be competitors for the Airbnb. And hotel chains, of course, and also, but not least, the Klook, Viator, and Get Your Guide, those online platforms servicing, providing activities to the customers can also be the competitors for Airbnb.
For the market analysis, I checked the Airbnb's market share from online. And first of all, traditional hotels combined together is around 70%, while Airbnb is 90%, which is, I think, quite remarkable, as Airbnb is fairly new business compared to brand hotels. Airbnb's opportunity, according to their S1 form, they said SAM, serviceable addressable market, is 1.5 trillion, total addressable market, TAM, as 3.4 trillion. If you break it down, the SAM consists of 1.2 trillion short stay, 0.3 trillion experience, while TAM is 1.8 short stay, 0.2 long stay, 1.4 experience. What I infer from this data is that Airbnb's core opportunity in the upcoming market is increasing their experience market share, which is 0.3 right now to 1.4 trillion, which is big jump. But as you can see, short stay and long stay is not as dramatic as experience. So I guess Airbnb's target is to increase their experience market share in the future.
For note, Airbnb defined the long stay as the stay which is longer than the 30 days.
30 days.
Okay. So this is what Airbnb said in their S1 form. However, I checked it if this value is correct. And global and US hotel market, according to EB's world data, is that global hotel and resort market size is around 1 trillion, whilst Condor Ferry said global hotel industry consists of around $570 billion, while Statista said US hotel revenue is around 198 billion, but it will grow up to 456 billion in 2025. Combining this data together, I am not sure what Airbnb is basing their TAM on, but to me, it seems that Airbnb is quite optimistic on their future. I understand it's S1 is IPO. They want to bring some pep up their IPO process. But to me, I think it's a little optimistic. But please correct me if I'm wrong, but this is what I saw from the internet. This is cliche. I really don't want to talk about this, but of course, the hotel industry has been greatly impacted by COVID-19. Left side is more of a longer term, and right is Asia Pacific from April to current. So we're seeing some slow recovery, but the market as a whole had been quite impacted by COVID-19. What about Airbnb? Unfortunately, I wasn't able to get the same length of period data, but I'm pretty sure they haven't suffered during the pandemic as well. It seems that they're recovering up to July, but due to second wave of pandemic, the visit volume had been decreased overall through the November. Airbnb's retention rates. I am personally a big time Airbnb user, X user. I preference X because I am not quite satisfied with their services. It's personal opinion, not industry opinion. And this data kind of backs up my opinion because Airbnb's retention rate has a sharp decrease compared to other hotel. And for me, it feels that with that price, with that services, I would rather go to the hotel
rather than
Airbnb. And I had a friend staying over the Airbnb, and he had a hard time with the heating system, so he called up the main apartment service system, and the host got so mad because he didn't talk to the host because host was not
wasn't aware of this.
yes, not a professional rental business person. He did it for side job, and he was afraid that he would violate any laws within the city. So I think that's one potential risk. And according to the data, the foreign revenue is count for 65% of total revenue. So why not checking flight information? And I checked the U.S. Department of Transportation. Of course, because of the coronavirus, the passenger volume had decreased quite significantly. And of course, the stock value is based on future events and future value. So people are expecting vaccine to spread over time. Market will stabilize and blah blah blah. But as I said, the people are, I think, quite too optimistic on Airbnb for whatever reason. So I just want to bring up to the table on that.
Yeah, so I read the S1 filing. I skimmed over. I'm not going to repeat myself. I guess the company was founded in 2008. The market capitalization as of last Friday, which is 2020 December 18th, is $95 billion, which I think is crazy number. The business model, obviously, they're in the hotel business, so I guess they classified as leisure, art, and hospitality. The IPO date we mentioned, IPO price 68. Something that I've noted was that I wasn't able to really make analysis based on 2020 revenue because it was impacted by the COVID-19. So I went ahead and used the number in 2019. The revenue was 4.8 billion. So if you divide that number by market capitalization, that would be like 20 times. But this isn't tech based company, so I'm not really sure if PSR ratio of 20 is the target number you want to buy at this point. Their identity as a company is the travel like human. So they wanted to bring experience. You know about the Airbnb, so
So if you use 2020 revenue, I guess PSR is like skyrocketing.
yeah, it would
To the
be.
roof.
I think it would be 25 to 30.
Okay.
I think. Stock movement, you are aware of it. All the newspapers are covering it. The price went 100 times. Yeah, it's
Skyrocket.
$157 right now. It even increased 6% last Friday, so I'm not really sure if this is. Anyway, the asset and liability as of 2020 September 30th. So this is before the IPO proceed that's coming into the company, into the balance sheet. Their total asset, they're mostly in cash, but if you look at the funds receivable and amounts held on behalf of customers, so that's $2.3 billion. So this is the asset as well as liability, so this doesn't really count. But you can see that the increasing number of this portion could really transfer into revenue into the future. So I mean, this is one thing that you should look at, but you shouldn't think about it as your asset. This is eventually something that you have to pay back either, or you can recognize it as your revenue. Liquidity ratio, I don't think it's that much of a problem right now, but they have a loan of $1.8 billion. I will cover it later. So this company has a bunch of cash right now, and they have some debt issue, and they have a lot of cash. So that's it. As for the income statement wise, the revenue has grown dramatically from like 2015 to 2019. But as you're aware of the current situation or current predicament of this company, their revenue is certainly at 2.5 billion, which is lower than what it was last year in the same time during the same time. Their EBITDA margin, the EBITDA is negative. Obviously, they've been making net losses for all the years since 2015. If you look at the business summary, they have 4 million hosts. This is why people are optimistic about the Airbnb because it means that they have 4 million rooms. If you think about it in terms of hotel, they are operating in 220 countries and 100,000 cities. Their 13 years cumulative users were 825 million users, and the cumulative revenue was $110 billion. So they're growing, and they certainly expanding really fast because you don't have to build hotel. You just have to utilize what's out there, potentially the vacant rooms. Due to COVID-19, revenue declined dramatically and then rebounded. I think it started in China 2020 January. The Chinese revenue from China has declined and then it rebounded, and same thing with the United States and other countries, other parts of the country. Their gross booking value as of 2019 was $38 billion. The revenue that was recognized was $4.8 billion. So you can see they're charging about 12%, 10 to 12% of the total booking value. I'm pretty sure this part is controversial, I think. So their gross booking value revenue has grown until 2019, and then it declined in 2020. The host registration part, this is why I think a lot of hosts would like to be part of Airbnb because they get the booking within 4 days, 50%, 4% of the chance that they get the booking. So as if you have a room or if you have a house that you want to host it with the Airbnb, within 4 days there's going to be 1 out of 2 chances that someone will be booking with your house. Certainly 75% within 16 days. So this is like a platform where it's drawing attention of the potential host, and this is what's strengthening the business model of the company. If you look at the revenue trend, it has grown dramatically, but if you look at the average growth is 52%, but very recently the growth is really just kind of declining. It was 80%, but it's now 32% as of 2019. So pretty sure this is negative growth for this year. So I'm thinking that the in terms of like a hotel business hotel kind of business revenue will be, I don't think it will grow um,
Twice.
twice as much as the stock market, but obviously as of 2019, I have a Korean letter there. I meant to yeah, but that just means years. America's revenue portion was 35%, and the other part was 65%. As you're aware, the European area is like the second largest portion of the revenue. They're like both of them are like almost 80% of the total revenue. So yeah, they're growing a lot faster than you think. And if you look at the graph on the left, United States revenue has recovered significantly in 2020, even after coronavirus. But other parts, like international part, has not recovered
Yeah.
completely. So I'm pretty sure maybe into the future when we have vaccines, European countries might not have to lock down the cities, and then their Airbnb can operate. But I don't think that it's at the stage where I have the confidence in the company. Gross profit margin is 75%. EBITDA is growing, but obviously you're aware that revenue has declined, so does the EBITDA. The gross portion is declining as well. Third quarter seems to be the important season for this company because this is where they see the positive EBITDA. So I think that if into the future when you get the newspaper and they said the third quarter was amazing, amazing for Airbnb, and you should be aware the third quarter was supposed to be amazing season for this company. You have to compare it from last year, I guess. This is the income statement component. Like if revenue is 100%, then the cost is broken down into the percentage wise. So if you look at the cost of revenue, it's just 26%. So this is why I said the gross profit margin is 75%. But they say that operations and support is basically what Mr. Connect has said in his presentation, that that there's got to be some form of customer service provided for the guest, because this isn't like a regular hotel business where you can just call up the front people and then request something from them. You have to basically Airbnb has to be there as like hotel front service people. So it's really, I think I wanted to, if I was the investor or investment banker of this company, I would probably count operations and support as the cost of revenue. I mean, you have to have this service, I think, for the revenue part. So I think gross profit margin is, I don't think it's 75%. I would think of it as 50% because it's an essential part of the business anyway. So yeah, so they're making losses because, like, if you look at cost of revenue 25, operation support 22, product development 27, sales and marketing 22. That's already 100% right there. So they're making losses right now. So the loan amount is 1.81 billion dollars right now.
This is big.
Yeah, this is a huge amount, and this is the only that they have right now. The loan was executed in this year, 2020 April. I guess they want to go IPO, but because of coronavirus, they don't have money to expand. And then so and so. The maturity date is 2025 April, so they have 5 years of the maturity. 1 billion is in first lien loan. The interest rate is LIBOR plus 7.5%, which is high, very high. And they also have a secondary loan, second lien loan, same amount, $1 billion, same maturity, principal repayment, same condition, but their interest rate is higher, LIBOR plus 10%. So this is kind of high interest rate. Second lien loan also has warrant issuance capability of like around almost 8 million Class A shares, exercise price at the $28.35.
28.
So yeah, so like if you're the owner of Airbnb, there's potential new stock issuance based on this thing. Funds payable to customer is both asset and liability to the company, so the liquidity issue isn't that much of a problem for this. Does not seem to be a problem for this company so far.
Actually, I was following up Airbnb since start of COVID. I was quite keen. I had a keen interest in Airbnb's IPO, but then they said in April that they are not able to go IPO. I think partially because of the WeWork. WeWork had their own IPO problems, and every IBs are kind of worried that their IPO will go sour. And then I read an article that Airbnb will cut down their employees and they will have 11% of interest loan. So I thought it was like the doom to the Airbnb. But it's great to see that they're back on IPO and listed on Nasdaq. But I think this is quite interesting take from Mr. Create.
So I was surprised as well to see the interest rate 10%. So banks are making money. The equity portion, it's divided into Class A, B, C, H shares. Class
Bunch of
A,
classes.
because of the predicament issue. The Class A, they have 1 vote, and Class B, it has the 20 votes, so
Per share.
potential new issuance, I think. I'm not the expert in reading the S1 form. It's like 300 pages, and I have my own job, so my job isn't reading S1 form, but it's my side job. But it seems like potential new issuable stocks are like 393 million shares, based on all those stock compensation, stock options, and restricted stock units. All those potentially, the issuable stocks are 393 million shares. Currently, the total issuable stock of Class A, I think, is 710 million shares. I think currently it's 600 something, I think. So into the future, you think about the dilution of the stock wise. 393 is out there somewhere. At a certain point, they will sell it in the market, and if you buy it, then you're paying for someone else's stock compensation. The lockup period, I think, will end in 2021 second quarter, because I read it somewhere. It said that the 2 audit reports have to come out, and within, I guess, 5 days, business days, you can sell it, I guess. So I don't know. It seems like next year somewhere, first half, I think lockup period ends. So you think about the dilution issue there. This company was founded more than 10 years ago, I think, and there's the employee who like to now get benefited or compensated for all those years that they made service for the company. So it's so the issue is COVID-19, I've said it so many times, I do not have to mention, but it seems like if the COVID-19 were to continue, or if somehow vaccine doesn't seem to be very effective, therefore we have to lock up the city again. I think the only way the Airbnb can survive, I think, the next round of trouble would be issuance of stock. I don't think there's much of a room for them to do the loan financing. So think about the dilution issue of the company. Net loss. This company has been making net loss, obviously, because of the startup company, and it's the negative factor to your share. Others, Mr. Kriya said, 2020, 1,800 employees were
laid off.
Marketing was limited because I guess most marketing people were dismissed, I guess. Host absorption is very important, really key metric for this company. So if we see the less number of users or guests, then this company's valuation has to be discounted. Large photo competitors, I don't want to repeat myself again. Policy changes in law, I think, are two factors that are going to materially affect the business model. So if somehow one day the government says, Airbnb, we are not going to allow it, then this company's business model will be materially affected. So, and home sharing concept is different for every country. So this is probably why marketing personnel has to be employed in this company for differences in culture. No guarantee of customer safety. If any physical harm was done on the customer, there's not much of a way. It's different from hotel, basically. So they're doing host filtering. They are saying that, but it's kind of getting hard, I think. One thing to notice is that Olympic Committee has made a partnership with Airbnb for next 5 Olympics for, I guess, the providing rooms for people to stay. I think this is a really positive idea because there's Olympic in certain country, and then when Olympic is done, all the hotels and rooms are vacant for years and years after. So I think this is one of the effective way of opening Olympics. I think for Olympics committee standpoint,
I think it's part of key reason why IPO stock value had been increased, hyped up, because that's 5 Olympics, which means I think 4 years of term.
So 10 years.
So we'll see 10 to 20 years of contract kind of partnership.
Yeah.
So I guess people are expecting that this will increase the value of Airbnb, and that may flow into the current hype up of their stock prices.
But personally, I wonder whether Tokyo will be hosting the next
Yeah.
Olympic,
Mm.
which is next year,
Mm.
successfully because of the COVID-19 situation.
I think it seems like we're talking negative about Airbnb, and it's because I think the people are paying so much attention to this stuff, like 100% increase in one day. I think for me, this business isn't like that kind of company where, the growth. I think growth story will be very limited.
You also mentioned that the CEO was very surprised to see such a huge
Yeah.
increase in the stock prices.
Yeah, one of those founders, right?
Yeah, one of the founders had the interview with Bloomberg, the interviewee, and then he was surprised to see the share has gone up 100%, and I think that his expression of the surprising factor is really the indication that that CEO himself didn't expect the 100% increase. So should I'm not really sure why the shareholder should be or so. If you have already owned the stock, then that's a good news. But at this point, would you want to buy the stock? I'm negative about that. This is why we're talking negatively about the stock. I'm not saying that this company will
Collapse.
The company
collapse.
itself is a good company.
Yeah, it's a good company. Due to loan covenant, additional loan is limited, so financing, as I've mentioned, if you think about it in that way, dilution is the is something that has to imperative. I think is the word. Default risks still exist because of COVID-19. I'm not saying they will go bankrupt right now, but if you think about it in 2025 when the loan maturity is coming and the company is not making much money than they had expected, then this certainly could be an issue. Stock new issuance is the only option for this company. 50 to 60% of the revenue is transaction in dollars, so 40 different currencies are like another factor for this company because the currency cost. I guess they say $4 million a year. That's not much, but still. M&A story. They acquire Hotel Tonight and Urban Door. I'm not really familiar with those two companies, but they did M&A in the previous years. Lack of peers ends in 2021. So this is like kind of summary of what I said, and that will have impact on this stock. So yeah, so if I summarize my impression of the stock based on reading S1 is that they are this company has many legal issues that they have to overcome into the years, I think. And another thing is, I don't think they will grow much faster in revenue wise because if that's what they're suggesting in their S1 form that they have to expand the experience portion of the revenue of like 5 times more from this point on. I think this is like kind of crazy valuation if you think about it that way. I don't think that the revenue from the host or guest, I think, will not increase as fast as what it was before, like in 5 years ago. So, not really sure if the valuation is correct right now.
And one of their main competitors, which is Booking.com, is now considering to expand their business to hosting small home owners, just like Airbnb. And also, you should be very aware of the situation of the COVID-19, and I'm not sure whether this will be recovered within a year or foreseeable future. Yeah.
Yeah, for me, it's regulation, service, and market. Regulation, as we discussed before, I read on an article that New York City is considering some legal issues with Airbnb. I guess it's part of their taxation and violating of their use of home. So if you go against the regulation, your winning chance of business is narrowed down. So that's one bad news to me. And services, though Airbnb itself is good services, but if you think about the hotel where they clean up your room regularly with professional, when I used Airbnb in my country, they did not change the bed sheets, or I even saw a dead cockroach lying on the floor, which was kind of this big. So I was freaked out, but I had to clean it, so I did my job. But there's some issues with the services. And the market, this is very hard to bring up to the table, but I think there's some type of bubble bubbling from the bottom to top. If you see DoorDash, Palantir, Airbnb, all the IPO stocks had been skyrocketing right after their IPO date, which to me it kind of resembles a dot-com bubble, but there is a liquidation issue in current market, so it's different from dot-com bubble. But I think we should be aware of why this market is so hot and why these stocks are going so skyrocketing. So if I combine those three things and the warranty and stock options, right now is not good moments. But who knows? There may be the good news coming up and the stock price will go up. But for me, for now, I think it's overvalued a bit. So I'll rather wait because I like Airbnb business model itself, but the stock price at now is kind of shaky.
So yeah, if you are like the subscriber of our channel, please let your friends know that we've done Airbnb this week.
Yes.
We read S1 form. We did a lot of research. I think we saved probably 30 hours of your time within like 30 minutes. So please subscribe to our
Subscribe
channel
and press like button.
and please be successful with your investment decision.
Yeah. See you next week. Bye.
Bye.
Bye bye.